The stock market is currently open, and right now, Ondas Inc. is trading at exactly $9.70 per share, marking a significant intraday drop of 8.66% during the session. This sharp decline follows a massive wave of volatility that has seen the stock ping-pong between the high single digits and the low double digits over the last few weeks alone, catching the immediate attention of active retail traders and institutional desks alike. While the headline number shows a steep pullback today, the underlying reality reveals something far more complex than a simple sell-off. The real surprise that the broader market is completely missing right now is the massive structural transformation taking place underneath the hood of this ticker. While short-term traders are panicking over a normal pullback following yesterday's explosive 21% intraday spike, institutional money is quietly looking at the company's aggressive, multi-million-dollar acquisition spree in the AI-powered defense software and counter-drone space, signaling that the company is rapidly buying its way into a completely dominant global market share. This massive divergence between short-term technical price action and long-term fundamental expansion is exactly where retail expectations are clashing hard with institutional reality. The common belief holding back most retail investors on the Ondas trading platform is that this is just another highly speculative, unprofitable microcap stock that is bound to dilute its shareholders into oblivion. People look at the massive daily swings, see a nearly 9% drop on their dashboard, and immediately assume the worst, treating it like a toxic asset. They see a company that has historical net losses and they back away, assuming the story ends there. But the contrarian view, backed by the recent financial filings, presents a starkly different reality. Ondas just reported a massive first-quarter revenue figure of $50.1 million, which completely blew past consensus Wall Street estimates by over 31%. That is not just a modest beat, it is a tenfold increase in revenue year over year and a stunning 66% growth sequentially from the prior quarter. When you see a company accelerating its top-line growth at that specific velocity, the old retail narrative of it being a slow-moving utility or a failing tech experiment completely falls apart. The market expectation was a slow, painful grind toward commercialization, but the reality is an absolute explosion in demand for their automated data systems and autonomous defense platforms. Looking directly at the recent stock movement, the daily charts show an incredibly fierce battle between shorts and momentum buyers. Just yesterday, the stock surged all the way up to $10.72, driven by intense volume as trading groups flooded into the name. Today's pullback to $9.70 shows heavy profit-taking and technical resistance near the $12 psychological barrier. Volume has been absolutely massive, with tens of millions of shares changing hands daily, far exceeding the stock's historical averages. This level of liquidity means that major individual brokerage platforms are seeing massive order flows for this ticker. Institutional activity has also started to shift, as evidenced by recent prospectus supplements filed with the SEC covering the potential resale of shares from recent strategic acquisitions. While some traders view these filings as a looming threat of supply dilution, a deeper look reveals that these shares are locked up with strategic partners who joined the company through high-profile mergers, such as the acquisition of Worldview Enterprises and the massive drone intelligence firm Mistralink. This heavy trading volume is being heavily influenced by broader sector momentum within the aerospace and defense technology industries. Macroeconomic pressures, particularly escalating geopolitical tensions across multiple international regions, have sent defense contractors into overdrive. Investors are realizing that traditional defense hardware is no longer sufficient, creating a massive bull market for autonomous aerial intelligence and counter-unmanned aircraft systems. This environment has allowed the company to trade with a high beta, meaning it moves fast and rewards those practicing active self-investing. Retail traders using specialized investing sites to track short interest and dark pool data are noticing that the short float has been elevated, meaning any positive fundamental catalyst has the potential to trigger massive short covering. This constant friction between short sellers trying to suppress the stock and momentum buyers looking for the next big runner is keeping the intraday volatility incredibly high. To understand why this stock is behaving so aggressively on individual brokerage platforms and popular retail apps, you have to look at its underlying balance sheet health versus its current valuation metrics. The company currently commands a market capitalization of roughly $4.78 billion, following an absolute monster of a rally over the past 12 months. Because it trades at an elevated price-to-sales multiple, the market is pricing in near perfection regarding future growth. But unlike many speculative tech names that run out of cash and go bankrupt, the balance sheet here shows a fortress-like liquidity position, boasting over $1.47 billion in cash and short-term investments. investments. With a current ratio sitting comfortably near 4.8 and minimal long-term debt, the business has an immense amount of breathing room. They are not looking for survival cash. They are deploying their capital as a weapon to swallow up smaller competitors. The negative operating income of roughly $42.7 million is heavy, yes, but it is driven entirely by massive research and development spending and rapid scaling overhead, which is exactly what aggressive growth investors want to see at this stage. For anyone managing their own capital through a self-investing account or an individual brokerage, it helps to understand what this business actually does outside of the daily ticker volatility. Formerly known as Ondas Holdings Inc. before a clean name change to Ondas Inc. earlier this year, the company operates through two highly specialized business segments, Ondas Networks and Ondas Autonomous Systems. The Networks division is built around their patented FullMax software-defined radio platform. This is a secure, private, wide-area broadband network technology designed specifically for mission-critical communications. It serves critical infrastructure entities like major rail networks, electric utilities, public safety systems, and oil and gas operations that absolutely cannot afford a single second of network downtime or cyber interference. They build the secure data highways that keep trains running safely and power grids online, generating highly sticky, long-term enterprise software and hardware maintenance agreements. The second half of the business, Ondas Autonomous Systems, is where the high-growth excitement lives and why the stock frequently trends on major online investing platforms. This division provides high-end autonomous drone data solutions and state-of-the-art counter-UAS technologies designed to detect, track, and neutralize hostile drones. Their portfolio features the Optimus system, an automated drone-in-a-box platform that operates completely autonomously to monitor large industrial sites, and the Iron Drone Raider, a fully automated interceptor drone designed to physically eliminate small hostile threats in mid-air without relying on traditional explosives. They also deploy the SentryX platform, a highly sophisticated cyber and radio frequency system that can detect and mitigate unauthorized commercial drones in complex urban environments. These technologies are being aggressively purchased by government agencies, homeland security departments, and global defense forces to protect critical infrastructure, borders, and high-value strategic assets. Comment below how many shares of Ondas Inc. you currently hold in your portfolio right now, and let me know if you are buying this recent dip or waiting for more clarity. When you compare this business model to the traditional tech giants that dominate standard index funds, you start to see why active traders are looking for specialized allocation tools. Many retail investors rely on automated platforms like Schwab Intelligent Portfolios or generic online investing tools to manage their wealth, but those algorithmic models often miss hyper-growth small-cap disruptors until they have already grown into massive multi-billion-dollar entities. For investors who prefer a more hands-on approach to building out a diversified growth sleeve, looking at individual tickers on a retail individual brokerage allows for tactical exposure to specific geopolitical and technological trends that a broad market robo-advisor might completely overlook. Whether someone is executing trades through the Interactive Brokers platform, navigating the user interface of the Robinhood app, or analyzing long-term equity trends via deep institutional tools, the consensus among active market participants is that autonomous defense is becoming an essential sector allocation. Looking ahead into the future outlook for this company, the trajectory of the stock will depend entirely on how the expectation versus reality dynamic plays out across their newly acquired assets. The central catalyst to watch over the coming quarters is the integration of Omnisys Ltd., an Israeli developer specializing in advanced AI-powered defense software, which they just agreed to acquire in a massive deal valued near $200 million. The market expectation is that this acquisition will take a significant amount of time to integrate, dragging down margins and creating operational friction. However, if the reality shows a seamless transition that immediately boosts their real-time decision-making software capabilities, the stock could easily break out of its current technical consolidation range and retest its 52-week highs. Conversely, the primary risk lies in execution. If the company fails to turn its massive $50 million quarterly revenue run rate into positive net income over the next fiscal year, the market may begin to penalize their high price-to-sales multiple, causing the price to slide towards its lower support levels. When you look at how people manage their broader portfolios, the choice of platform often dictates how they handle this kind of volatility. Active traders running positions through the Interactive Brokers trading platform or using advanced features on the Robinhood stock trading app are often focused on the fast-moving technical support lines, looking to trade the daily swings between $9 and $12. Meanwhile, long-term investors using traditional wealth management accounts such as Fidelity Investments individual brokerage accounts or checking their long-term holdings on the Fidelity mobile app tend to ignore the daily intraday noise entirely. They are focused on whether the global adoption of autonomous drone networks will scale over the next 3 to 5 years, treating the asset as a venture-style bet within a broader, highly stable portfolio of blue-chip equities. Ultimately, the central insight to take away from the current action on Ondas Inc. is that the market is currently pricing in intense near-term uncertainty, while completely ignoring the staggering pace of the company's underlying operational expansion. The expectation held by casual market observers is that the stock's current intraday drop of over 8% to 970 is a sign of structural weakness or a failing momentum trend. The reality, however, is that the company has just put up a historic 10x revenue growth quarter, holds an incredibly deep cash cushion of over $1.4 billion to fund its operations, and is aggressively buying up dominant intellectual property in the AI defense space. For any investor evaluating this ticker through an individual brokerage or monitoring the tape on an active trading platform, keeping a close eye on this massive gap between short-term retail perception and the hard, accelerating reality of their balance sheet will be the key to navigating the wild volatility ahead. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends. Subscribe for more updates.